Guys, we're going to look at 5 stocks that our Everything Money community is looking at and or buying. First one, Johnson & Johnson, J&J. Oh, look, dividend yield of 3.1%.
Great company. I'm assuming that everyone loves this because of the dividend.
What is going on here? Leads up $11.9 billion of their $16 billion in free cash flow. Look at the difference between net income and free cash flow.
Oh boy.
Yeah, I don't like that. That's something I just like, whatever. Pretty good return on invested capital, though, 13.5%. It means they get a good return on the money invested in the business and good margins. This is the difference right here. Look at that profit margin last year versus 5-year. I'm going to go look at why that is. Did they sell something, Mo? Do you know?
No, I don't know. So when you are on Twitter and you're talking to people about dividends, is this always one that comes up?
Wait a second.
Whoa, look at that revenue jump.
All right, so big jump in profit. You know, I would not go, guys. First thing I'm going to say is don't bank on that. Doesn't seem like a reason, because look, they did $20 billion last year, the year before. They did $35 billion last year, but their revenue was only up. Actually, their revenue up's a lot, about 16%. They must have done some sort of, was it an acquisition, Mo?
The revenue is already falling quarter to quarter.
Oh, look, they did a $17 billion acquisition. Okay, that might be why.
Okay.
Quarter to quarter, there's a drop in revenue?
There's a drop, yep. There's a drop from the last quarter to this quarter.
Okay, so maybe you should factor that in. I mean, well, so I guess the 5-year PE won't really matter that much. Analyst estimates, let's see what they're thinking. Not much growth in that EPS. From $10 a share to $12.50 in the next 5 years. Revenue growth, low single digits. Guys, because of that, you can't be paying a high multiple for this company. You cannot be. So understand where that $35 billion in profit came from. Was it from the acquisition? Is it steady? Is it going to continue to grow? Right, Mo?
Yeah, absolutely.
Stock number 2, Rowe Price. Full disclosure, I own Rowe Price. I want it to fall further so I can buy more shares. Never, ever buy a company just because somebody on the internet has it. We're here to teach a process. We want you to learn how to be able to fish on your own. So Rowe Price has been driven up a lot lately, probably because of stocks going up. What's it even at?
It's up 4.5% today.
All-time high of 206 was back in August of 2021. Now it's 107. Look at this dividend yield, Mo. That is a fat baby right there.
Yeah, it is.
You can't even afford it based
That's
on last year's free cash flow.
Right. Let's go.
Okay. I don't like that.
Based on, actually, that's a big dividend.
It's a very big dividend. I think that
even going back to 2018, during COVID, they hit $2.85 billion in free cash flow. It was fine. But outside of that,
guys, I'm not what the internet would call a dividend investor. I don't even know really what that means.
Dividend chaser.
Yeah, that's what I prefer to call it, dividend chaser. What I want to do is I want T-Rowe to stop doing this dividend.
Yeah.
I want them, listen, if the markets go up, T-Rowe will do better. If the markets go down, the revenue and profit will probably get worse. I'm going to pull up Stock Analyzer. Let's look at analyst estimates actually first. I mean, look at this is not sexy at all. 730 to 843.
And it's actually quite realistic if you think about the direction that things will more likely than not go in the next 5 years.
Yeah. I mean, we're at really high valuations. And let me see the last time I did T-Rowe in our Stock Analyzer tool.
They basically have zero revenue growth.
Let's go to November 2022. This is a 10-year analysis. I even did 0% revenue growth, 3 and 6%. Profit margin 24, 28, 32, assuming that they're going to drop. Free cash flow down. PE and price of free cash flow 15, 17, and 19. I'm kind of good with that because I think they are the leader in like the 401k kind of business. And I put 11, 13, and 15% for my desired return. Hit the analyze button. Look, it's on my watch list at 92.50. I got a low price of 70, high price of 120 to 130, middle price of 90 to 100. I already have some shares. So I just want it to go lower and I'll buy it accordingly. Now remember, the price return here and this desired return includes that dividend. For those of you who are asking, stock number 3, BC. What is BC? What are people at? Brunswick Corp. Oh, I know Brunswick.
Oh, Marine Recreation Industry.
The marine recreation industry. Guys, this is absolutely driven by economy.
They own Freedom Boat Club. Okay.
What's Freedom Boat Club?
You basically have a subscription and you can go anywhere in the country to wherever there's a Freedom Boat Club and take out a boat.
Oh, I kind of like that.
Yeah. Sure. Yeah.
Yeah, look at Tim. Isn't that a good idea? That's a good idea. I didn't even know that. Mm-hmm. Oh, they own Boston Whaler and Sea Ray. Oh.
Sea Rays are great. So like you look at this and say, okay, this is great. Just it's in a luxury economy, basically.
Yeah. You know, it's funny. I just read an article yesterday on our main site on Everything Money. Luxury goods spend is down 15% year over year.
It's huge.
That is very huge. Now, let's go back to the Great Recession. Now, granted, that was a very extreme recession, but look at how revenue fell for this company. 5 billion, 5.5, 5.7, 5.6, 5.3, 2.96. So it will get hit.
So they actually lost money for 4 years following the Great Recession before they came back to being positive.
Back, baby.
Yep.
Let's look at their 8 pillars. Oh, wow, it's up 6% today. Oh, wow. It's just the debt. The debt's the only issue they have right now on the X.
What isn't up 6% today?
That's true. What is the market doing right now? Oh.
All right. Analyst estimates. I would assume that, whoa, this is not what I was expecting to see.
What'd you get?
$9.58 this December, $16 in December of 2028.
Well, for the full year of
For
2020.
the full year.
Yeah.
That's large.
Yeah. That's almost, that's a 70% increase or so.
It's not what I would expect here. Revenue side,
I'm gonna do stock analyzers on this one.
6.8 to 8.2 billion.
Guys, I'm gonna do something different though. I'm gonna do a 20-year analysis on Brunswick Corp.
So you can go through ebbs and flows?
Yeah, because I look at this going, this is gonna be something we have to look at cyclically. Mo, let's look at, okay, so revenue growth of the next 20 years. I'm gonna do 2, 4, and 6%.
Okay.
Profit margin. So they basically in the 7% range. So let's say they average 5.5 on the low side, 7 in the middle, 8.5 on the high side.
Okay.
Free cash flow. Oh, free cash flow is lower. I don't like that. 4, 5.5, and 7. Now PE. So PE, they have Boston Whaler. They have Sea Ray, 2 great brands in boating. So I'm going to go 13, 15, and 17 on both, even though there's going to be, if there's any slowdown in the economy in the next 20, they're going to have issues. So, but desired return, though, this is a company where I want a higher desired return because this will greatly get affected by any sort of pullback in economy at any time in the next 20 years. So you're going to have choppy returns. So I'm going to do 12, 14, and 16% returns.
Okay.
Hit the analyze button. All right. Low price of 40 to 55, high price of 76 to 92, middle of 57 to 72. So you know what I'm going to do, Mo? I'm going to add it at $50.
If it gets super cheap.
If it just gets stupid cheap, my guess is something's happened in the economy, and that'll allow us to take a look at this company, probably go further down. Where did the stock price go in the Great Recession? Let's see how much the stock got hit in the Great Recession. A high of $38.79, a low of, whoa, $1.55 a share. So guys, this is something that if you pay attention to this one, this could be a good one when things are looking absolutely bleak and people are saying, we ain't buying new boats. Boom. I'm excited about this one now. I'm actually going to add it to my watch list at a different number. I'm going to remove it and add it to my watch list, add notification.
20.
I was going to say 20, and then I said 25. Let me do 20. You might sit there and say, Paul, that's crazy. Remember, my philosophy in investing now is I want big companies that I can buy and hold on to for a long, big market cap, like, 50 billion plus, 20 billion plus. This is 7 billion, still a big company, but I want it when nobody wants it. I want it when people are like, this stinks, because that's something that could compound on itself for a very long time. If you bought it for $1.30, $1.50 back in the Great Recession, you're up 70 times on your money. It's pretty awesome. All right, FTNT, Fortinet, not Fortnite, Fortinet. I don't know if I'm pronouncing that correctly. A platform-based cybersecurity vendor with product offerings covering network security, cloud security, a very important aspect of the internet world going forward. All right, so let's go check out the 8 pillars on this. Oh my gosh, Mo, look at this.
Oh, wow.
So good news is they're reporting higher free cash flow last year and 5 years than their net income. So they're probably depreciating a lot. So I'm going to focus on this 5-year price to free cash flow of 37 versus a 67 PE. I'm looking at their free cash flow. So their free cash flow is better. The question is, what's their growth potential?
Look at their ROIC.
Let's see. Holy cow. Oh my gosh. Okay. Analyst estimate, $1.50 to $3.60. Big growth there, over double. Revenue growth, double digits. Okay. This looks like an interesting stock. I'm going to do a 10-year analysis on this bad boy. Have I ever done it? Let's see.
Doesn't sound familiar. Oh, there you
I
go.
have. February of this year.
What did you put in?
I put 6, 9, and 12% over the next 50. I did a 15-year analysis. Let's do a 10-year analysis. Let's do 6, 10, and 14.
Okay.
Profit margin. Let's go 15, 20, and 25. Oh my God, look at this free cash flow. Unbelievable. I'm going to go 28. I'm going to go 27, 32, and 37. PE, 13, 16, and 19. And same with price of free cash flow. That's what I'm focused on. My desired return, though, 10, 12, and 14. I'm good with that. Mo, what'd you do? Are these reasonable to you?
Yeah, I was looking at as you were going through and putting in the same numbers. It seems fine to me. It's a good start.
Focusing on free cash flow here.
Yep.
30, 45, 67. Okay. So let me add it to my watch list.
$50.
Actually, I'm going to do 40. I'm going to do 40.
Okay.
Because it's not like I'm like, I got to have this company. There's a lot of cybersecurity guys out there. Let me put on my watch list at 40. I can start doing some research on it. What is the low? What is the 52-week low for this company? 44, which was just a month ago. All-time high was July of this year at 81. Look at how much stocks can fluctuate, guys. 81 in July, 44 in November. Incredible. Final stock, guys. PFE, Pfizer. Guys, Pfizer got smoked yesterday. It is at a 10-year low. We repeat, when COVID was happening and everybody was excited about the COVID vaccine, Mo, what did we say?
Don't buy into this. Don't
Why
buy
not?
into the hype. Because
Why not?
It's not a sustainable model.
We didn't think it was sustainable.
And look at the revenue.
The revenue is starting to really collapse here.
As you did $32 billion in the year of 2020, and by 2022, you were doing $100 billion.
All because of COVID.
All because of the vaccine.
Yep, and it's not going to last forever.
Right, and the numbers show that.
Yeah, so they still made money last year.
Not saying this is a bad company. This is a great company.
Yes.
They make phenomenal drugs outside of a COVID vaccine. But
So for me on this one, Mo, I'm more just going to focus on pick a long-term average free cash flow and just assign a multiple to it. It probably seems reasonable right now because if you look at the cash flow statement, here are their free cash flows by year. Let's strike out these for COVID and look, 15 and a half, 14, 13, 13, 16, 11, 11, 8. So it's declining here, but this is Pfizer. This is a world leader in drugs. Could this be a play right now? It's a $150 billion market cap. So if you call it $10 billion in free cash flow times a 15 multiple, it's $150 billion. It's right there. But look at this. Big dividend. Everybody's probably excited about this, but it eats up all of their cash flow last year.
yeah, that can't stay that
So
way.
is it sustainable? The other thing is about Pfizer, guys, what's their pipeline look like? What drugs do they bring in market to go grow even further, kill the market with their amazing drugs? I don't know. So guys, that's where we are. Thank you very much for your time.